Ouch. Should I sell my stocks now? I think that's a question a lot of people are asking. Why? Well, because stocks are doing terribly right now. You probably wish you sold this one. Bumble's down by 28% in after hours. SMCI is down by 20% in one day. Airbnb, record decline on earnings. And this quote sounds really easy to say, but sometimes it's hard to do. So we're going to go through at the end of the show and talk a little bit more about this advice from Warren Buffett. Maybe you shouldn't be owning stocks. Oh, so maybe it is time to sell. But what exactly drove the sell off today? Well, it's pretty simple. Stocks wipe out gains after weak Treasury sale. And right now, the market is in extreme fear. And historically, this is not an area where you should sell. Why? This is an extreme reading. You're selling into what would normally not be a good time. But sometimes it's good to de-risk if, again, this quote does not resonate with you. You should probably be out. So what happened today? We got a 10-year auction that came out at 1 o'clock, and it was weaker than expected. I want to see whether or not we get more of the same tomorrow at 1 o'clock when we have a 30-year auction. This is going to likely be very important. Let's just read this headline because this is really what drove the market today, as I alluded to before. So stocks swoon after weak $42 billion Treasury sale, markets wrap. High-grade issuers also offered $38.1 billion, the most in 2024. This is after we got a big boost after the Bank of Japan was a little bit dovish, basically like the equivalent of Jerome saying stocks should go up, to make it really simple. The rapid slide in U.S. stocks that followed a weak $42 billion sale in treasuries underscored the fragility of the global financial markets in the wake of historic volatility. After an equity surge driven by the Bank of Japan's dovish signals, the S&P wiped out its gains. Investors shunned the 10-year note, which is normally seen as a safe haven. So to make it really simple, if we look at the 1 day, hey, it doesn't look all that bad. But if we now look here to the 4-hour chart, what do we note? Oh, it's actually worse in the afternoon. Yeah, that's right. That's exactly what I'm showing you here. If we now look at the 1-day chart, what do we note? Well, we got a bearish engulfing candle. Let me just double check to make sure we don't. Actually, we don't. The bearish engulfing candle is here on the NASDAQ, higher high, lower low, and currently below the low. So we'll go through some charts. We'll go through some charts at the end. But I'd be lying if I said I'm not a little bit upset here, right? Look at Jerome. He's like, yep, well, what are you going to do? Exactly. Probably wish you sold these ones. And I'm going to make an effort to go through the popular charts tomorrow morning on the stream. So make sure you tune in for that. But again, back to today's story. So normally you don't want to sell extreme fear. We don't normally hang out here for all that long, but have a look here. August to September, bottom out into October, then move higher. That's what everyone is expecting. So let's see what happens here. We got a bounce from fear. Now we're here into extreme fear. It could be a little bit longer. So this is the question you really want to ask yourself. Are you going to regret selling and it goes higher? Or are you going to regret selling and it goes lower? Why? Well, if this is the reason why stocks went down today, the bond sale, treasury sale, what do we get tomorrow at the same time? We get the exact same thing. So what could happen? More of the same. And why does this matter? Well, because we've been talking, let's go back to the daily chart. A bearish engulfing candle by definition is bearish. It has the word bearish in it. So let's delete everything here and make it really simple. We gapped up strongly today. We went to a daily higher high, and then we got a fail breakout. And by the end of the day, we washed it all out. We closed below the low. Let me just double check that. 434.56, 434.37. We closed at 0.77. So technically a bearish engulfing candle, but we closed just above that key low. So now that we fast forward to the weekly chart, hey, if we get more of the same tomorrow, this candle does not look good. It's an inverted hammer. It means weakness. It means that we're at risk of actually losing this uptrend. And when we look here objectively, there is a pattern which is very obvious that unless we get above the pivot, which is pink, it's a head and shoulders. So the bulls have to break this inside bar bull by Friday, or next week we have to get tighter and then break it, or the bears are going to come in and stomp us lower, which means there's more pain ahead. As we looked on the fear and greed, this could last till September, maybe even longer. And if we don't bounce off this uptrend, we're no longer going up. The bulls are losing control. And on monthly candles, we're already seeing some weakness. We got that with our warning of printing a monthly lower low. If we pop over here to SPY, I have this 4-step recipe. It's fairly simple, but we have to wait all the way till the end of September. I'm not sure people really want to wait, which is why I'm really focusing on these weekly patterns. They all show a similar pattern here of head and shoulders. So if that washes out, yeah, maybe you do want to sell, even now, because If you've been worried about the 7.5% move lower and you are worried, then maybe you shouldn't own stocks because you don't understand that over time, stocks do tend to go up and down. Let's just take a little step back in history here. But just before we do that, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So if now we go here to a log scale and we go back in time, what do we know? Oh, there's like lots of times when stocks go down. They go, let's go all the way back in time here, right? Down, 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 down. Yeah, there's lots of times where it goes down. But what Warren Buffett is basically trying to tell you is that over time, stocks go up. The S&P was worth $4 back in 1971, $4 and some change, went down to a low of $3. Now it's worth 5,000. What does that mean? Over time, stocks go straight up. But there are bumps along the road, ebbs and flows, where we do go up and then we also go down. So now let's go back to arithmetic. Let's go back to here. So that's really what it comes down to. If you've been really stressing out right now, you need to probably rethink things. And that's the takeaway I'm leaving you here with this weekly inside bar break. Why? Your money's supposed to work for you. Your stocks are supposed to be out there working for you. So if you're working for them, meaning you're stressing out, you're losing sleep, they're not working for you. You're working for your money. That's not how investing works. That's not what Warren Buffett is telling you here. And he's wise. He's old, which means we should listen to him. All right, now let's push forward because there's still a few more things. So the 4-hour chart is not looking all that great, and we've been reviewing it for the last few days. Money market funds have also swelled to a record 6.15 trillion. And Warren Buffett has raised cash, which means he's trimmed. He's now at roughly 25% cash, and he's actually competing with the Fed for T-bills right now. So you're like, all right, that's it. I'm ready to quit. Well, again, let's read the quote. Let's understand what Warren Buffett told us, and let's try to find a silver lining if it's possible. So what he's basically saying is that if you're scared when stocks go on sale, you probably shouldn't own them because this is like going to your favorite store and getting offered a discount. When the market goes on sale, these are the 500 most elite companies in the world. That's why they're in the S&P 500. They're the best companies, period. So when the best companies go on sale and you get scared when they go on sale, you probably shouldn't be in to begin with. That's what he's basically telling us. Again, I'm not sure if this number is going to be correct either, but it's been revised as of yesterday, and the growth shows 2.89%, which would be above the current rate of inflation. But investors are not waiting. They're selling first, asking questions later, which is the reason why we saw this record boost in the VIX. It got way above 60, which is a record. It's a very historically high number, only 3 times on record. What I talked about is that we're likely going to see the amount of volatility decrease, which we have, but it does not mean that stocks have to go up now. Why? It just means that people have bought their insurance. That's this move right here. If we lose this weekly low, and which means losing the uptrend, we're going to likely be in correction territory here. We only have to go down to 508.64 or roughly 8 more points or 1.5%, 2%, and we're right there. We're in correction territory. And just like that, my mouse is not working, so I'm going to leave it there. I wish you guys the best of luck into tomorrow. And if you want to come hang out with me at 9:15, I look forward to seeing you. Thanks so much.